This presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have Euro USD's daily chart. Mind you that this is the time frame we will be using throughout the presentation, unless otherwise stated. Now, before we start, let me mention that we're going to be mixing technicals with fundamentals today. So don't be surprised to see, besides the technical analysis, some fundamental comments. Given that also today, Monday, it's expected to be a rather quiet Monday. No major financial releases or high-impact financial releases are expected today or during tomorrow's Asian session. So most probably we may see fundamentals leading the way for the markets. Okay, let's start with what happened on Friday. We had an outage, which was caused practically by an update of CrowdStrike's softwares. Now, that was affecting also Microsoft. It was characteristic how banks, airports, a number of industry participants have been affected. Okay, the issue is now under control, but in my opinion, it highlighted once again how fragile the whole system, IT system, is and how easily it can be disrupted. Maybe the main headlines for the weekend were the fact that US President Joe Biden has abandoned his bid for the presidential elections in the US in November. Now, the development tends to highlight a number of issues. It seems that most probably Kamala Harris, currently the VP of the US, is taking over the ticket. Now, Kamala Harris has a number of plus and minuses here. Let's start with the minuses, the drawbacks. And first of all, we have to note here that in the polls, Kamala Harris also did perform rather poorly, especially in Midwestern states and the Rust Belt states. I do not see the option of Kamala Harris as actually solving or breaking the deadlock politically for the Democrats. That's one issue. On the other hand, though, we have to note that the ratings were for her as a vice president. Now, the picture is different. We have Kamala Harris running for president, and the judgment's going to be made also in comparison with Joe Biden. Definitely, Kamala Harris is expected to be more vibrant. There is no more the age issue. Democratic donors seem to have been encouraged by the development. And I may even say that some may be favoring Kamala Harris. So that was a plus. Another plus I would be adding on a political level would be the fact that she's a woman and she's practically bidding for the presidential throne. In my opinion, it would be it would be the first woman president of the US. Socially speaking, that would be a development and could generate some votes for her. Also, I would be noting that the fact that she was a district attorney comes into direct contrast with President Trump, which has been convicted. So I expect that to be also a key point in the pre-election period, the short one, but still. It's going to be interesting to see how the overall issue is going to be developing. I would expect the next week to show us the initial voters' reactions on the issue. For the time being, we note that Market-wise, there was a slippage of the US dollar at the opening today. However, there was also a strengthening of the US dollar once the Asian session started. And in my opinion, that tends to allow for more optimism on behalf of the markets. There seems to be more stability, less ambiguity, and overall, markets could feel a little bit more confident about the election of either President Trump or Kamala Harris. We should wait out and see. However, I would be posing a question here. And the question is, who will be running alongside her as a VP should she be elected as the candidate of the Democrats? It's an interesting question. It's an issue which opens up a lot of possibilities, especially should she choose somebody from the Rust Belt states, say Pennsylvania, for example, would be an option, which could provide her some additional support in those key swing states. Okay, let's have a look at the price action of Euro USD. This is the daily chart, as we have mentioned, definitely. Sorry. The movement of Thursday and I would note also on Friday highlighted an interruption of the upward movement, given that the 1.0915 support line has been broken and now turns into a resistance line. Let's reposition and correct the labels. Starting with the R3, which is now being placed at 1040. The R2 at 1.0980. The R1 at 1.0915. The S1 at 1.0860. The S2 at 1.0815. And the S3 at 1.0765. Now, direction. Okay, definitely the breaking of the upward trend line tended to suggest the possible initiation of a downward motion. But in my opinion, we're not just there yet. And I would be noting for this practically the upward movement of today's Asian and early European sessions. It's characteristic that the candlestick is in the greens. But I would be also noting that we have here the RSI indicator below our daily chart, which remains between the readings of 50 and 70, implying a residue of a bullish sentiment among market participants for the pair. For the time being, we tend to maintain a bias, or if you prefer, we switch our bearish outlook in favor of a bias for a sideways motion, possibly between the R1 and the S1. Mind you that volatility is quite low. Actually, it's very low in my opinion. And we may be seeing here tight range-bound movement between the R1 and the S1. Should the pair nevertheless break the S1 1.860, then we would be talking about a bearish outlook. Why? Because that would allow us also to more or less start drawing a downward trend line, or at least would be initiating or would provide more proof about the bearish intentions of the market for the pair. Let's have a look at USD/JPY. Now, here we see a very, very different picture. We see how the pair dropped, broke the upward channel, that's for sure. Broke also the 157.54 and corrected a bit higher. Used the 157.54 as a resistance line. It's characteristic that the pair was unable to clearly break above it and on the contrary remained below it. And we have a renewed bearish candlestick, which tends to imply that the bearish movement is to continue. The RSI indicator also is between the readings of 30 and 50, implying a slight bearish sentiment on behalf of the market, which could push it lower. At this point, we could also draw a nice downward trend line, given that we have a lower peak in the fact. And as long as the downward trend line remains intact, we tend to maintain a bearish outlook. Yet, to be more certain about the bearish intentions of the pair, I would require the pair to break the 154.60, practically form a lower peak than this one, and that would allow it to start aiming for the 151.85. However, that movement may take 3 or 4 days to become more obvious. On the other hand, an alternative suggestion, which could also gain some traction, would be that the pair has broken the lower boundary, or if you prefer the upward trend line, or the lower boundary of the upward channel, yet seems to be stabilizing. And in that case, we may see a sideways motion prevailing, which would be signaled should the downward trend line be broken, and the pair remains between the R1 and the S1. And movement like this remains to be seen. Moving now to GBP USD. Daily chart. Allow me to reposition the labels once again. And definitely we have a break of the S1, which now turns into a resistance line. By the way, feel free to share with us any trading instruments you would like to have a look at in the chat section. Nice show here. I'm keeping this in green. 1.2610. Let's reposition. Sorry about that. Let's reposition and correct the labels. Starting with the R3, which is now being placed at 1.3140. Actually could widen it a little bit. That's better. The R2 at 1.3043. The R1 at 1.2945. Should you have any comments about the technical analysis, feel free to share at any given moment. The S1 at 1.2835. The S2 at 1.27. And the S3 at 1.2610. Locking everything in. Okay, let's talk direction. Sorry about that. Similarly to the euro, the pair has broken the upward trend line guiding it and seems to be stabilizing. This time cable is just below the 1.2945 resistance line. The RSI indicator remains between the readings of 50 and 70. Note how practically we have the 20 moving average, which is the median of the Bollinger Bands, the 50 and the 100 moving averages, all pointing upwards. In my opinion, the pair remains in sideways motion. Definitely the bullish outlook has been interrupted for now. So for a bearish outlook, I would require the pair to breach the S1 1.2835 and start aiming for the 1.27, nothing less. For a bullish outlook to be renewed, we do have to get a higher peak than this one. So the price action has to rise, breach the R1 1.2945, but also breach the R2 1.3043. Let's have a look at USD CHF. Also an interesting element. Note the correction higher. Definitely we're going to be... I would like to make a repositioning of the levels here. That's it. We have widened our margins between the resistance support lines. Let's place some labels on them. Starting with the 0.9220. Could be 22. 23. Yep. The R2 could go a bit higher. See these peaks here? They're forming a resistance line in my opinion. Let's try at 0.1995. Nice touch here, touch, slight false break here. I'm keeping it. .90 being the first resistance line. Starting with the S1 at 0.8915. Let's have a look at that. Yep, note the true. The S2 at 0.8825. Practically we had a true here, but we had a slight false break. In my opinion, the level holds. And finally, the S3 at 0.8725, a level which has been tested here. Now, definitely we have a break of the S1, so that has to be changed into resistance line. Let's go hunting for a new ultimate support line. Nice touches here. I'm keeping this. In green. repositioning the labels. Now, in the grand scheme of things, we have to note that USD-CHF has marked lower peaks. On the other hand, though, we have to note that it has failed to mark lower truths, which tends to highlight the possibility of a sideways motion or some stabilization. And I think that's a bearish triangle which isn't the forming. In that case, in the more long-term view, we may be implying that there is a bearish possibility ahead. Let's correct also the support lines, 88.25 and S2 at 87.25 and the S3 at 0.8605. Here you go. Now, one could argue that we have a bearish triangle moving like this. Yet that remains to be seen whether that's going to be validated or not. The fact is that we have lower peaks and stability of the truth, which forms the basis for such a triangle to emerge. For the time being, we tend to maintain a bias for a sideways motion between the R1, 0.8915, maybe with a false break or not, and the S1, 0.8825. For a bearish outlook to emerge here, we would require clear breaking of the S1, 0.8825. Mind you that the RSI indicator is between the readings of 30 and 50, implying a residue of a bearish sentiment among market participants for the pair, which could drive it actually lower. Something which we will have to wait and see here. Now, I'm going to be moving a little bit away from the FX market. I would like to have a look also at gold. Or if you prefer, before we do that, we had a movement of AUD-USD yesterday. And I think that's pretty obvious. Now, allow me to draw some levels here. So definitely the sideways motion was broken, given that the upper boundary has been broken as well. Yet the price action corrected lower, and definitely this upward trend line is no longer valid. I'm going to go a little bit short term on this one and clearing the chart, repositioning the labels, locking them in. So we see that the pair has 1, 2, 3, 4, 5, 6 days of continuous losses. Something like this. That would become more obvious should we drill into the 4-hour chart. Even better. I think the downward trend is obvious. It's characteristic that the RSI indicator below the 4-hour chart has reached below the readings of 30, highlighting the bearish sentiment, the current bearish sentiment of market participants for the pair. Yet at the same time, maybe implying that the pair has reached oversold levels and may be ripe for correction higher. So be on the watch out for this one. If we drill into the daily chart, the picture changes in the sense that on the one hand, the downward motion is still clear. The pair's price action seems to be enhancing the bearish movement even further as it intensifies the downward slope. The RSI indicator has breached below the readings of 50, and it's currently aiming for a reading of 30 in a straight downward line. That seems to be pretty bearish as well. For the time being, we tend to maintain a bearish outlook, and as long as the price actually remains below the downward trend line, the bearish outlook seems to be maintained. Small word of caution here about any possible corrections higher. Now, also another pair I would like to have a look at is USD CAD, given that we have the BOC interest rate decision. That's on Wednesday. At this point, the pair seems to be testing the upper boundary, if not has breached the upper boundary of the sideways motion. One could even widen the levels. Like this. And let's go hunting for a new ultimate resistance line. And I would like also to check the R2 on which, okay, this is the peak and it's pretty strong. I'm keeping that. We have a level right here. It's pretty wide apart. Could be narrowed to this peak, a little bit lower here. But that's too narrow in my opinion. I think this one is the best. And that would be the 1.4040 resistance line. So let's color this in red. So on the one hand, we have an upward movement, which is highlighted by the upward trend line. The RSI indicator is aiming for the reading of 70. A similar picture in the reverse from AUD USD we saw previously. But in both cases, the US dollar is losing ground. Sorry, it's gaining ground. Sideways motion seems to be maintained. At this point, allow me to also add some labels here. So starting with the S3 at 1.3395. Setting the S2 at 1.3520. The S1 1.3610. R1 at 1.3780, and this has to be colored in red. The R2, which is being placed at 1.39. And the R3 at 1.4040. Adjusting the chart a bit, that's it. So for the time being in the big picture, we are maintaining a sideways motion bias between the R1 1.3780 and the S1 1.3610. We highlight the bullish tendencies of the pair over the past 10, 1, 2, 3, 4, 5, 6, 7, 8 days. Note also the RSI indicator, which is shooting up towards the reading of 70 steadily. So there is an upward motion in pair, yet for a bullish outlook, we would require clear breaking of the R1 1.3780 and the pair to start aiming for the 1.39. Overall volatility remains at low levels. That's pretty obvious. And it's understandable partially given that we have also the earnings season at US stock markets, which tends to generate a number of headlines and gets increased attention right now. So let's have a look at Microsoft, which is about to release its earnings report this week. Now, we had the incident with the Microsoft outage on Friday, and we see how the pair's share price corrected, yet has not regained the lost ground. The green candlestick you can see right here is the movement of Friday, where it opened with a negative gap and regained some of the motion, yet remained below the 437.90. And let's color this in red. Set it as a resistance line. I'm not quite certain that it will be able to breach above it, but it's a possibility which should not be underestimated. Okay, let's place this on the show here. Going a little bit back. Could be placed on the peak in green at 340.5. And another support line on the show right here. Yeah, you can see how there was a verification as well. Both seem to be pretty valid levels. Okay, back to the chart. Let's place some labels. R3 at 490. The R2. Give me a sec. Rounding it up a little bit at 468. The R1 now, which is being tested as was tested on Friday. And that would be at 437.9. S1 409.20 in green, please. Let's have a look at the S2. Before we move on though, 366.20, 6, and finally the S3 at 340.5 and a half. That's it. Now the price action seems to have broken the upward trend line guiding it. That's pretty obvious. That happened on Friday with the negative gap opening, yet the price action seems about to recover some ground. I would expect the price action to remain in a sideways motion if it doesn't start to fall again. Mind you that the RSI indicator has broken below the reading of 50 and it's currently aiming for the reading of 30, implying a building up of a bearish sentiment among market participants for the share's price. That's more or less the issue here. For a bullish outlook, we would require the price action to breach the 437.90, breach above the upward trend line, and start aiming for the R2 468. Once again, the catalyst behind any bullish movement would be expectations for the company to actually report better than expected earnings and revenue. It's something which is quite questionable given also the outlook of the levels. For the time being, once again, we tend to expect the pair to remain in a rather sideways motion to stabilize somewhat. Could be above the R1 437.90. That's something which remains to be seen, most probably during today's opening and American session. Very, very interesting. Allow me also to have a very quick look at NASDAQ. The tech sector has been in the epicenter of attention over the past days, and especially after the fact that the Biden administration seems about to enforce heavy tariffs on not tariffs, a banning practically of exports of microchips to China. So that's a big question. For the time being, we note that the upward motion of the pair was interrupted past midweek on Wednesday. That was this candlestick, this one's Thursday, and the stabilization on Friday. It's interesting whether the index will use the 40,350 resistance line, actually now it's a support line, as a platform to start jumping higher. That should sum it up. From all of us here at IronFX, best wishes for solid trading.
Okay, let's go ahead and get started. So, as per usual, a risk warning and disclaimer. Our products are traded on margin and carry a high level of risk, and it is possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risk involved. The information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. Redistribution of the material is strictly prohibited. So I'm Melanie and I'll be your speaker for today. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. We're going to start off with a really quick intro to stochastic oscillators, in case any of you guys haven't used it before. And then we'll talk a little bit about RSI because they are pretty closely related. And then we'll compare the two, followed by some divergence trading. So if you guys are unfamiliar with divergence trading, we'll definitely go through quite a few examples in this webinar. And if we have time at the end, I will take some requests as well for any charts that you'd like me to go through. Yeah, so let's go ahead and get started. Wait, let me just make sure you guys can see me. Okay. So how exactly do you use your stochastic oscillator? So wait just a second. Okay. So what exactly it is, firstly, is that it consists of two lines that fluctuate between 0 and 100. So the first line is called your K line, and it represents the current closing price of the instrument in relation to the high and low prices of a given period. The second line is called the D line, and it's basically the moving average of K over a certain number of periods. So I have a pretty more in-depth explanation of it here on the slide if you are interested in that. So the slow stochastic indicator, which is your D, is a 3-period moving average of K. Difference between the slow and fast stochastic oscillator is the slow K, which incorporates a K slowing period of 3 that controls the internal smoothing of K. So setting the smoothing period to 1 is equivalent to plotting the fast stochastic oscillator. So the fast stochastic oscillator is basically your K line that we mentioned earlier. Okay, so how do you use it exactly is basically for us, we will use the settings that are 533, the readings that are greater than 80 indicate that price is near its high. Readings that are below 20 indicate that prices are near the lows. Okay, so a security is overbought when K moves above your 80 line, and a security is oversold when K moves below 20. So I've included the formula for the stochastic oscillator as well in case you were curious. But most of the time when you're using this indicator on your MT4, MT5 on TradingView, it's normally calculated for you already. So this is just like FYI. Okay, now let's talk a bit about its pretty closely related cousin, which is your RSI. Oh, I also wanted to mention earlier that your stochastic oscillator is a momentum indicator, but it doesn't provide information about the direction of the trend. It's also a lag